What's up everyone, Jamie here. In today's video we're going to go over the challenge fund. If you're wondering what this challenge fund is I took 4 different investment strategies, 3 from different YouTubers, one being Graham Stephan, where I picked 5 different ETFs he likes to invest in. Another one which is Joseph Carlson, who likes to invest in dividends growth stocks, as well as Jeremy from Financial Education, who likes to invest in more small and mid-cap stocks. And then I also took a recession-proof strategy that I created myself, and I pit these 4 investment strategies against each other to see how they do every week throughout the year. Now, it's been a month since I've updated this portfolio because I had major problems with my computer, but we're going to get into that today and show you how it's been doing. And I'll tell you what, the last month has been terrible. But first, in today's video, I want to just go over, if you're new to investing, how to invest your money. With the Dow Jones down 13% so far this year, the S&P 500 down 18%, the Russell 2000 down 23% year to date, and the NASDAQ down 28%, there's really no safe places to invest your money right now. And then also Bitcoin and Ethereum are getting destroyed as well so far year to date. Bitcoin is down 39% for the year, and Ethereum is down over 48%. So again, nowhere has been safe this year to have your money parked. If you've never invested before and you're looking at the news and everything is terrible so far this year, it's a scary time to invest. But this is where I want to point out, in the last 30 years, the S&P 500 has had an annual return of 10.72%. That's going through the 2001 dot-com bubble, the 2008 Great Recession, 2020 with COVID. It doesn't really have this losses so far this year, but you get the drift. It's had 3 major corrections in the last 30 years and is still averaging over a 10% return. So this is where you can use the 7-10 rule. What the 7-10 rule is that if you can earn a 10% annual return on your money, every 7 years, whatever you invest, it should double. So let's say you're 20 years old and you put $10,000 into the stock market, and you still get that 10% annual return. By the time you're 69, that $10,000 would turn into close to $1.3 million. That's why it's so crucial to put some of your money towards investing into the stock market. If you're thinking about investing for your retirement, I recommend putting in a bare minimum of 5% of your income towards your retirement on up to 25%. Now, this 25% doesn't need to be all into the stock market. It could be with other investment opportunities as well, but that's what I would try to work for as you get older in life. In my Creating a Plan for Your Money videos, we discuss this in more details. If you'd like to check out those videos, I do have them linked up above. So now you're asking, where do I start investing my money into the stock market? Well, if your company offers some type of retirement 401k account, this is where I would get started. Most companies offer a 3 to 6% match, dollar for dollar, for whatever you put in of your income towards that retirement account. So if they offer a 6% match, I would try to put in 6% of my income, because that's like earning 12% off your income that goes towards your retirement. If you've maxed that out and you have more money you want to allot towards the stock market, the second best thing I would recommend doing is opening up a Roth IRA. This is a tax-free account that will grow tax-free over time, and you are always able to take out the principal without any penalty. And then once you get to retirement age, all the growth and all the money you have in there comes out tax-free. So that'd be the second area I'd look at investing in. Then finally, if you still have some money left over and you want to invest more into the stock market, this is where you can open up your own stock portfolio account through many different apps out there. I do use M1 Finance. I do have a referral link down below, so if you want to use that, you can go ahead and use that in the description. The main reason you want to invest in the stock market is to get that compounding growth that we talked about earlier. The sooner you do this, the better off you'll be. You got to think of the stock market as reverse psychology. You know, when things are really bad like they are right now, this is the time you want to buy more, because the prices are much cheaper. And then when it goes up, you may look at buying less and maybe even taking some gains at that point. Obviously, your retirement accounts, you normally can't take any gains without penalty, but this would be more on your individual portfolio. So let me go ahead and take you to my computer now, and let's go ahead and take a look at the challenge fund and see how it's done the last month. All right, now that we're on my computer, let's go ahead and look and see how this fund is doing. Since we started this fund February 28th of 2022, we're down almost 15% since we started. We started by putting $500 into each one of these portfolios, and then each week we dollar cost average by putting an additional $100. That is still with a great day today, where this portfolio is up 3.62% just today. So overall, we're almost down 20% before today. So looking at each one of these investment strategies, we'll kind of just see how each one's been doing since we started this journey. So the recession-proof stocks that I picked is only down 1.30%. So now let's go and look at if you were just invest in all ETFs, which is what I did for Graham Steffens. So this one was the S&P 500, the total stock market ETF, an international ETF, a small cap ETF, and the NASDAQ QQQ. So this one is down 11.40% since we started, with today it being up 2.68%. Now let's go ahead and take a look at the dividend growth stocks that I picked from Joseph Carlson. So all time it's down 14.54% since we started this journey. And again today, it's up 3.53%. So overall it had a really great day, but still it's down quite a bit, and in third place for the year so far. And the final investment strategy we're going to look at is from Jeremy from Financial Education. Again, he picked a lot of small and mid-cap stocks that are more risky, but they also have way more growth when things go up. So as the stock market's been going down, it's also taken my biggest hit at negative 33%. So as far as today goes, it had the biggest gain almost at 9%. So you can see these kind of more riskier stocks will take bigger hits when things go down, but they'll also go way up when things go well. So that's why we just keep dollar cost averaging into all these every week. As they go down, we're buying them at better deals, and then as they go up, we'll hopefully keep buying them on the upside as well. So I wanted to give you an update on this challenge fund. As you can see, for the year, it's been pretty bad so far, but a lot of the stock market has been, so there hasn't really been any safe haven, like I've said. But we're not going to let that discourage us. We're just going to keep dollar cost averaging, and hopefully by the end of this year, we'll start seeing some big gains and go from there. Again, with these videos, I'm going to show full transparency, whether it's good or bad. So if you're thinking about investing, you can kind of look at these 4 different investment strategies and see if any of these would work for you. If you want to take a look at this portfolio in more detail, I'll go ahead and have a link in the description below so you can go ahead and take a look at each one of these portfolios more in depth. That's it for today's video. Thank you so much for watching. I'm going to go ahead and let my dog Timber take this one away.
Hey, do my owner a favor and smash that like button and subscribe to his channel. Go ahead, I'll wait. Did you do it? Much appreciated.
It's only worth it if you work for it. I won't stop till they hear me now. I won't stop till I wear the crown.